We're going to compare the personal loans from LendingPoint and 60-month loans. We've spent years working in the lending industry and we track dozens of lenders. We want to break down these two lenders so that you can see which one might be better for your particular situation. The first thing that we're going to look at are the loan amounts that they offer. LendingPoint's minimum loan amount is $2,000. 60-month loans minimum is $2,500. So even though the difference isn't all that significant, LendingPoint does have more flexibility on the low side, so I'm going to highlight them. If you're looking for a more substantial amount of money, LendingPoint will lend up to the curiously unrounded number of $36,500, and 60-month loans tops out at $10,000. LendingPoint gets credit for the higher loan amount. For both of these lenders, it is important to remember that the amount that they offer you will depend on your particular financial situation. LendingPoint personal loans have terms between 2 and 6 years. Contrary to their name, 60-month loans will lend as short as 1 year and maxes out at their 60 months or 5 years. Neither lender will charge a prepayment penalty, so it's always a good idea to pay the loan off early. The way to save the most money on interest is to make as many extra principal payments in the first year of the loan that you can. Now let's look at the cost of the loans. LendingPoint's minimum APR is 7.99%, which is respectably low in this day and age. 60-month loans minimum is 19%, which foreshadows who they lend to, and we'll get to that shortly. LendingPoint does get credit for having the lower APR. LendingPoint's maximum APR is 35.99%, and 60-month loans top rate is 69%. LendingPoint gets highlighted on the top rate as well. LendingPoint will charge an origination fee that will depend on the state in which you live and could go up as high as 10%. 60-month loans is a little bit more clear on their origination fee. It's between 5% and 10%. I won't highlight either of them because they feel pretty much the same. The origination fee is a percentage of the borrowed amount and comes out of the proceeds of the loan. If you borrow $10,000 and have a 5% origination fee, you will receive $9,500, but you'll still need to repay the $10,000. Remember that the origination fee is accounted for in the APR. The APR is the origination fee plus the interest rate. All things being equal, you want a lower origination fee if you plan on paying the loan off early. Paying off early will save you on the interest that you would have paid, but you don't get a reimbursement on the origination fee. LendingPoint lends to people with fair credit and might lend into the bottom of the good range. People with credit scores between 620 and 700. 60-month loans probably dips into the poor range, but probably not too far. People with credit scores between 600 and 680. But these are only guidelines. Lenders don't usually use credit score to determine eligibility. They usually use information like payment history, debt-to-income ratio, utilization, income, stuff like that. Both LendingPoint and 60-month loans lends only unsecured loans. This means that they do not require collateral, like the title to your motor vehicle, in order to apply. This also means that if you struggle to repay the loan, they can't seize any of your assets as repayment. I generally think it's a good idea for personal loans to be unsecured. However, securing a loan can make it easier to be approved or get a better rate than you otherwise would have. Still, neither of these lenders offer secured loans. LendingPoint says that if you are late on a payment, they will charge up to $30. I'm not entirely sure why it isn't a set number. It could be that they are matching state regulations, but you do need to know that $30 is a high fee in the industry. Now, it's not the highest, but it's awfully close to being the highest. 60-month loans is even more unclear. They do not report whether they charge a late fee or not. So let's summarize what we've learned about personal loans offered by LendingPoint and 60-month loans. LendingPoint clearly beats out 60-month loans in nearly every category. LendingPoint has more flexible ranges of lending amounts, has better overall rates, and is a bit clearer about their policies. But I will say that because both of these companies lend to people with fair credit, you never know whether you are going to be approved or not. This is the space where slight changes in your payment history, stability of income, debt to income ratio, or any number of other metrics can be the deciding factor on whether you are approved or not. That's why we always recommend that people with fair credits should apply to at least 3 or 4 lenders before you make a decision. It's very possible that one lender will approve you where another won't. Each company has their own algorithm for making decisions. So whatever you do, you should make sure to shop around. At the Yukon Project, we've tried to make shopping around easy. If you visit our marketplace page, you can apply to any one of our featured lenders, and behind the scenes, we will check your rate with up to 40 other lenders. Our partners use a soft credit check, so applying won't hurt your credit score. We will show you all of the approved offers so that you can pick the loan that's best for you. If you have any questions about either one of these lenders that we didn't cover, leave a comment below and we'll try to answer it. If you found this video helpful, please like it and subscribe to our channel. Thanks for watching.